Hello and welcome. You're watching Your Trades, and what a day of trade today, Kavita. Absolutely in green and full day. We also touched 25,000 marks, but finally below 25,000, but yet above more than 200 points if you talk about Nifty. And still the momentum continues.
Absolutely, and auto on fire today, best performing index. Let's get you the top factors of today's trade. Talking about the gainers that really closed on a very high note. We saw the Nifty surpassing 25,000 mark after July, and totally, you know, when you look at sensex also, we saw a rally of up to more than 1,000 points, but then the closing has been somewhere around 650 points, which is almost 81,273 levels. But having said that, FMCG autos were totally on a high rise today, looking at the GST rejig, as in we are still waiting for a formal announcement, but then as per the sources and what all we are able to gauge by our experts as well, the two slabs, the industry has totally welcomed it, and even the sectors, looking at the way they have performed, it's a very welcome move from their end also. Stock specific action also, which were trading on a higher note, belong to FMCG and auto. Maruti Suzuki closing, you know, more than 8.5%, Hero Moto more than 5%. Nestle and other FMCG counters were also trading high. Having said that, we also saw government extending the steel safeguard duty. This is as per the sources, but then this has gone up to almost 3%, where we also saw a stock specific impact, and that's again a welcome move, looking at all the uncertainty around the tariff structure as well. Other stock which was in focus today, it was Voda Idea, and the losses have narrowed down in Q1, and that again was an impact, a stock specific impact, and also made headlines in today's trade. Having said that, one very important development at the sixth round of India-US talks has it's delayed, but then we are yet to see what comes out of Zelensky, European Union, and President Trump's meet today later during the day, and also we'll be keeping an eye on the Jackson Hole meeting. But having said that, insurance stocks are again were gaining because of the premium cut that we are expecting in terms of the insurance policies and the entire sector, the way it's going to turn around and benefit from this particular cut. Having said that, crude is steady as far as the commodity part is concerned, because there is still uncertainty on the Trump-Zelensky meet. And yes, Mumbai is soaking in rains. Even now we are seeing there is a red alert by the IMD, and few rounds of high tide also expected. But having said that, it was raining green, Ankur, I would say, in the market, and the
color is green. The color is green. You look at outside, if you're watching from Mumbai, it is green. And of course, the market momentum day, if you can call it, after many days of consolidation, we have seen this kind of momentum.
Yeah, almost 6 weeks that were given to the bears, and now it's a complete bull rally.
The important question now is from viewers whether or not this momentum will continue. And to answer that, we have with us Lakshmikant Shukla, who is technical analyst at Yes Securities. Lakshmikant, welcome to our show. My first question to you, will we once again cross 25,000 mark, and that too this week?
Good afternoon to both of you. Thanks for calling me on your show. Now, answer of this question is again lies in the hand of the market, because we have seen a strong gap up opening following the positive news of GST revamp, and which is expected in this coming Diwali. So I think that is the one of the most structural change which we will see in the market. But in today's sessions, Nifty, both the indices has formed shooting star kind of pattern, which is showing profit booking at higher levels. Nifty faced strong resistance near its 50-day SMA levels, which is placed around the levels of 25,050. So that would be the key level to watch it out for in the upcoming sessions. I think once it surpasses this hurdle, then after we can say Nifty will be the out of the wood, and we see further upside rally toward the levels of 25,200 to 25,250 zone. However, on the downside, support is seen near the levels of 24,750 followed by 24,700. So I think that is the level which we need to watch it out for in the upcoming sessions. But as long as it hold the levels of 24,750, we could see some sort of consolidation, and once it surpasses this hurdle, then upside rally will continue toward the levels of 25,250. While Bank Nifty has also seen upside move, but again it faced selling pressure near its 50-day SMA levels, which is placed around the zone of 55,000, 56,400 levels. So holding below this level, I think some sort of correction could be seen in the Nifty toward the levels of 54,000. So I think structure of Bank Nifty is slightly bearish if we compare from the Nifty, because we have seen positive traction from the private sector, but PSU banks has not given much upside move. So due to which we have seen some sort of bearish pattern in Bank Nifty.
All right. All right. So, Lakshmikant, now let's also talk about the continuing uptrend in FMCG and auto that we saw today. What all are you expecting from this particular sector? Can we see the momentum going on to the next trading sessions as well?
See, talking about a Nifty Auto Index, which has given a strong breakout of the levels of 24,250, and then after we have seen the formation of bullish belt hold candlestick pattern, so we could see further upside move in Nifty Auto Index toward the levels of 25,800 to 26,000 zone, and most of the stock has already given a gap up opening. So I think any retracement to its previous swing low could bring opportunity for taking long bet in Nifty Auto Index. However, Nifty FMCG has seen the formation of bullish candle, but if we look at the some stock like Colgate Palmolive and Bata India and ITC, they are still struggling to surpass its previous key hurdle. But selected stock in FMCG could give upside move like Marico, Dabur, and Hindustan Unilever, so which is showing positive upside momentum, and we could see a further upside move in these spaces.
Lakshmikant, now in this market, which are your stock specific picks or which one can keep in the portfolio and watch out for?
From my side, I would like to recommend two stocks. First one is Hindelco. So it has given a strong breakout up to levels of 710 with the formation of bullish candle, and MACD has also given a bullish crossover on the daily chart. RSI is also trending higher, so I am expecting a strong upside move in Hindelco toward our target of 760, and on the downside, the levels of 685 could provide a strong support. So I think that would be the good bet if anybody want to take long in the upcoming session. And second stock is coming from the cement sector. So following few weeks of correction, ACC has seen a strong rebound from the lower level. And in today's sessions, it has given a gap up opening. Even we have seen traction in the cement sector due to this announcement of GST. So and even RSI has given RSI is showing positive divergence on the daily chart. So we are expecting a strong pullback move in ACC toward a target of 1,950, whereas strong support is seen near the levels of 1,780 until it hold above this level. This upside pullback move could continue and could hit our target of 1,950. That we are what we are expecting from the ACC.
All right. So Bicol and Hindalco target is 760 and ACC target is 1950. Now, having said that, what's your take on the healthcare sector, considering that it's primarily domestic facing and not so in tune with domestic headwinds as well. Any specific pick over here, or what's your overview on this particular sector?
See, Nifty healthcare sector has seen a pullback move after taking support from its 200 DMA, which is placed around the zone of 14,000, and then after it has started making higher tops and higher bottom. But if we look at the structure of last two sessions, Then again, it faced profit booking with the formation of bearish candle, but still defending its 20 DMA levels, which is placed around the zone of 14,600. So I think holding above this level are we will positive, and we could see a further upside move in Nifty Healthcare Index once it surpasses the levels of 14,800. Then afterward it could move toward the levels of 15,200. In if we talk about any stock specific recommendation in Nifty Healthcare, so I think Apollo Hospital, where we can see a strong upside move in the upcoming sessions, and second one is Max Healthcare. So I think these two stocks are strongly looking positive on the daily as well as weekly chart. But if we talk about Fortis, so Fortis has already given a strong upside move, but I think we should wait for the dip toward the levels of 910 to 890. I think that would be the where we can play buy on dip strategy in Fortis Health. That is the level to watch it out for this stock. So once it retraces toward the levels of 890 to 900, so I think that would bring opportunity for taking a long position in Fortis Health. So according to us, these three stocks could give opportunity for taking a long position in the upcoming sessions.
All right, so hospitals stock recommendations given by Lakshmikant. Thank you so much for joining at this hour and giving your views. And continuing with the healthcare space, Lakshmikant is not the only one who is recommending hospital stocks. Hospitals remain the best play in the Indian healthcare sector, and that has been said by Hiren Ved of Alchemy Capital. He shares his views on this sector. Let's listen in.
The best way to play it is through the hospital sector, right? Because we have seen that post-COVID, the sector has done phenomenally well. India is still massively underpenetrated. And I think there is significant improvement in margins and return profile. And there is a lot of investments that is required in this sector. And this sector holds a lot of promise. I think in general, health insurance and hospitals are a better way to play the healthcare sector at this point in time in India.
All right, so that's a word coming from the Vice, and healthcare is on the radar. But then we move on. So that's a fine print on slabs that's making around the news. But what about the market play? Brokerages are already crunching the numbers. Bernstein says GST cuts could mean an $18 billion hit to revenue, but a $13 billion boost to consumption, with consumers, auto and durables in the sweet spot. The common thread, consumption, looks set to shine, while industrials and capex could take a backseat. To tell us which sector stands to benefit the most and where investors should be cautious, let's go across Sharad, who has all the details on this. Sharad, what's on radar, and how are experts and brokerage houses looking at this now?
It's expected that from 28% to 18% tax slab, that is where we are expecting the ACs to come in, the TVs to come in, the refrigerators, some segments in auto segment, and also the cement also. Now, who will be the key beneficiaries? Of course, there is no second guessing. We are having a consumer discretionary plays such as Blue Star, Walters, Havells, Amber Enterprises, Dixon Tech, and all of them are coming out of a weakness in the seasonality. So it will be very interesting to watch how these stocks react. The cement pack, that would be buzzing as well. And another important trigger is the S&P upgrade rating happening in the sovereign, where global funds might also be coming in, and lower interest rate scenario augurs really well for the cement pack, as they're actually holding their prices also despite monsoon coming in. Interestingly, Eicher Motors, TVS Motors, Bajaj Auto, even Atul Auto, these stocks would be in focus in the auto space, especially on the entry level side. That is where the more GST benefit is expected to kick in. That's what the sources have been stating to the channel as well. Up next is the consumption part, which is of course a bit on the discretionary segment. From 12% to it can come to either nil or that 5% slab, and this is very important. These includes hair oil, jam, fruit juices, namkeen, dairy, notebooks, medical items. These items might be very sundry, but it's very helpful for the overall audience. Dabur, Mrs. Bector's, ITC, Bikaji, Pratap Snacks. These are the stocks which should be actually looking after, where there can be a good up move coming in. Hindustan Foods, and also the medical devices. That stock is Polymedicure, where you should be having a focus on. So a whole lot of stocks coming in the mid cap and the small cap space. These names might be a bit lesser known, but these are expected to jump in the trade. Also, the agriculture, fertilizers, and the renewable segment that PM Modi had mentioned in his Independence Day speech for these sectors, where good up move can be expected, and the Atmanirbhar concept would be applied for all the sectors which he spoke on. Those stocks, RCF Fact, all these stocks would be in focus. Also, the agriculture segment, Kaveri Seed, Jain Irrigation, Dhanuka Agritech, that's where the action would be there. Renewable energy, long list coming in, Tata Power, Adani Green, NTPC, SGVN, Suzlon, and that is where the benefits would be kicking in as well. Infra names also, if you look at L&T, NCC, IRB Infra, that's where the buzz is also coming in the construction space. And of course, when the cement stocks come down, the prices come down, then it aids the construction names as well. Textile sector, that's the beneficiary coming for the GST inverted duty structure. And stocks such as Nahar Spinning, Indocount, Himmat Singha, Arvind, Nitin Spinners, all across the value chain are expected to benefit. However, the industry is having some pain when it comes to the exports because of the uncertainty in the global cues. Also, interestingly, Sin goods or the luxury goods, that is where 40% GST rate could be applied, and that actually goes negative for Nazara Tech, Delta Corp, and a luxury place such as Ethers, Stanley's, and even Landmark Car, to name a few. Special GST rates are expected to continue in the diamond and jewelry segment. Not much changes for Web of Global, Rajesh Exports, and the jewelry segment. Pens, packing, container boxes, and capital goods rate cuts are less likely, so no major impact is expected to kick in, such as Link, DOMS, Cummins India, Thermax, and Siemens. So overall, this is the 360-degree picture which we have got for you. This is where the most of the stock action would happen in the day's trade.
All right, after Sharad, we have Varun standing by to give us an overview of what the brokerage houses like Bernstein, Kotak, and MK are saying about it. Let's go across to Varun. Varun?
This GST rate rationalization will actually impact the economy as a whole. It would impact the GST collection. It would impact the overall GDP of the country. But yes, it would give a consumption boost, and that is actually going to help sentimentally at least the markets today. Now, Bernstein says that an optimistic case of this measure will result in a net consumption boost of around $13 billion, and also it can push the overall central deficit by around 20 basis points. But a capex cut of around 5% will limit the overall impact to around 5 to 10 basis points. This can also lead to pressure on the rupee. But yes, the domestic themes that would actually do better. The overall fiscal deficit, which were expected to be around 4.3, can go up to around 4.4%. But yes, the overall losses of GST, which can be to the tune of around 1.57 lakh crores, that would be divided between the center and the state, and the center could actually take the larger share of the losses that could happen because of this overall GST rationalization. But they believe that the equity markets will actually cheer this overall fiscal push, and a recovery in demand in the economy will actually push the private overall spends going ahead. Also, they expect Nifty to continue to expect higher double-digit single-digit return for the rest of the year. They are overweight on consumer, equal weight on utilities, and underweight on industrials. Now, Kotak says that it could actually impact the overall consumption theme, and the net rate may provide 2.3 lakh crore boost to the overall economy, and this would be positive for autos and durables, although the cement sector will see limited benefit. And also they are saying there could be some price changes in the coming days by some of the companies. Now, MK says that this will actually lead to overall losses of around 0.4% of GDP for the government. So, and also this will impact the CPI inflation to the tune of 50 to 60 basis points. Also, you have Motilal Oswal, which says that it will actually reduce the retail prices by around 4 to 5%, easing overall household budgets. And they say that companies like HUL, Britannia, Maruti, Ashok Leyland, Voltas, these are the companies which could actually benefit. And also Antique says that this will actually provide a big consumption boost to the economy, and the rationalization coupled with the with other consumption tailwinds could actually drive the second half recovery, supported by the overall strong festive demand. So it's a boost for the economy. No doubt there could be some impact on GDP, there could be some impact on GST collection, but yes, it will actually lead to a consumption boost and sentimentally positive for the markets as well.
Thanks, Varun, for all those details. Let's go across to my colleague Ravinder, who is standing by with a list of stocks in news which were buzzing in trade today.
Well, it's on the back of order win, KC International is in focus, where company has won order of rupees 1402 crore in T&D, civil and cables and conductor segment. Apart from this, Dilip Buildcon is also in focus, where company has declared lowest bidder for rupees 2,952 crore Rajasthan water grid project. And apart from this, Dilip Buildcon joint venture with RBL has got a LOA of rupees 1,503 crore in the Gurugram Metro Corridor project. Apart from this, Alembic Pharma is also in focus, where company has received final FDA for US FDA for one of its cream, and the cream has an estimated market size of USD 94 million for the 12-month ending June 2025 according to IQVI. Apart from this, Kotak Mahindra Bank is also in the focus in today's trading session, where Kotak Mahindra International, which is a subsidiary of the bank, has become the first Indian firm to receive HCA license for investment and portfolio management in the UAE. And lastly, JSW Steel were also in the focus, where JSW Steel, which is India's leading steel maker, and South Korea's POSCO Group, are the leader in the steel production, has signed a non-binding heads of agreement to jointly explore setting up of a 6 MTPA integrated steel plant in India. So back of this, JSW Steel were also in focus.
Thanks, Ravinder, for that long list of stocks in news. With this, it's time for a wrap in this edition of Your Trades. Thanks for watching.